So that all of that was pre-COVID. So tell us, I mean, I know how much progress you have made since then, but tell us a
Mhm,
little bit about the next few years, all the challenges, what you've got
mhm,
kind of gone through, where you are now, what were key milestones until
mhm,
you reached where you are now. Tell us a little bit about that journey, maybe the
mhm,
creation of the product, what it does, how it's structured for the key
mhm.
stakeholders. Can you do that?
Sure. Yeah, definitely. So it's a crazy journey in that she and I originally started a company in Spain, actually. And so we had been building in Spain and had actually scaled our team to about 14 people at the time. And
Wow.
we were going through the regulatory process there, and we were actually, building the company. And at that time, we won grant funding from the New York State Energy Research and Development Authority, known as NYSERDA. And so when we won that grant funding from NYSERDA, we actually reevaluated the two markets, the US and Europe. And one of the key things that actually made us really fundamentally rethink our whole company was that in the EU, you could raise up to 5 million euros through crowdfunding for any project. And in the US, previously you had only been able to raise $1 million. And you know that with solar, $1 million is not quite the scale of many projects. You can get residential, some small commercial, industrial, but there's really a large market segment there that's too large for that. The SEC, in exactly that same month, changed the laws around crowdfunding so that you could now raise $5 million for any given project. And so we saw, wow, these two regulatory playing fields are now the same. And we can take these best practices that we've been learning in Europe and apply them to the US. And the US was a much more attractive market because there was one regulator, one primary currency, and more or less one primary language. In contrast to the EU, there were 27 regulators, a handful of currencies. I mean, the complexity was exponential there. We actually fundamentally restarted and pretty much just started the company over, she and I. And by taking that big risk and just starting with a blank slate, we were able to then use that grant funding by NYSERDA to, sign our first letters of intent in the US, partnered with the Department of Energy, secure pro bono legal representation by Morrison Forster. And through that, we got all of the regulatory approvals to then launch the platform here in the US. And a funny story, having completed those masters in Europe, I actually did my second master's in Stockholm. And myself and my co-founder, she and I were huge fans of Greta Thunberg. And every Friday, she was down there at the Parliament building, doing the Fridays for Future protests. And we went, well, what if we go down there? Maybe we'll meet her. And so we actually went down and we met with her and we worked with her for more or less a year. And we ran the first wireframes of the product by like she and her friends. Because we went, look, if they're never going to use this, then we've already lost. We have to make this fun enough that someone like that would really feel compelled to use our product. And so the first 4 like Figma prototypes that we made, she ended up testing out and, giving us feedback on. And so very fundamental in our journey there, and was just incredible to meet one of our own heroes. But now that we're in the US, we are an SEC registered funding board. And what that allows us to do is issue regulation crowdfunding capital raises. So what's happening is a project developer is coming to Climatize and they are saying, hey, I want to raise capital for this project, or I have an existing project. The structure that we've really worked with is we heard time and time again from developers that they needed development financing. Construction is relatively well understood by banks, and some of that perm debt is accessible, but that is also very limited when you're talking about projects below $10 million. The underwriting costs in terms of time and transaction costs, the
And
banks
also
just.
and also projects that are like early in the development, like that have not
Mhm,
yet gotten the, well, I guess you don't start the construction process until after NTP, notice
mhm,
to proceed. But
mhm,
still, the small size construction projects are hard to finance is
mhm.
in solar is what you're saying.
Exactly.
I get it.
Yeah. So we kept hearing that from developers. And so we kept trying to figure out how is it that we can create a funding structure that really fills a very meaningful need for the developers and provides the appropriate amount of protection for the investors. And the way that we were able to ultimately structure this is it's back leverage debt on a project where it's an asset-backed security so that you essentially as the investor have what's called cross-collateralization. The project developer uses an existing asset and the cash flows from that asset as the collateral to be able to then go and borrow development financing at a competitive rate. And what this does for you is
so the developer is using a previous project as the collateral for this particular project that they're raising financing from Climatize.
Exactly. So what they do is they say, okay, you can come invest in this specific project. So let's talk about a project that previously has been funded on Climatize. There was the RTH Community Solar Project. It was located in East Longmeadow, Massachusetts. That project, they enabled the community to go and invest in that project. The capital that was raised in that raise was used to go develop 2 new projects. But then the investors who invested, they had that asset-backed security, which was backed by the cash flows of that solar project and the actual asset value. So you had 2 forms of collateral on there, and it had general liability insurance in case, anything happened to the building or to the system itself. And so that way the investor had a nice strong backstop on their investment, and the developer was able to go and recycle their capital to the development of new projects. And that was part of the innovation there. Was one of the real challenges is lending against the development phase is really difficult because that's often, your interconnection studies, your environmental studies, your irradiance studies. It's all of the early stuff that doesn't actually have backing. And so if a project, doesn't get its interconnection permit, then that development phase can be a bust. With this, the investor now has the backing of the solar projects, the PPA, and the actual asset value.